Hi there everybody, this is Adrian here. It's the 2nd of October 2017 and let's have a look at this week's market news. The US shares ended the week at record highs and the US dollar notched its first monthly gain since February of this year. And the main drivers were slightly hawkish comments from Yellen regarding a likely path of interest rates and renewed optimism over President Donald Trump's tax cut proposals. There was also ripples in the FX and bond markets on Friday after confirmation that Mr. Trump had met Kevin Warsh, a former Fed governor, to discuss his potential nomination to succeed Janet Yellen as chair of the U.S. Central Bank. The US dollar firmed modestly on the news as Warsh is known as a known critic of the current Fed policy. Oil markets started the week in bullish mood as speculation about supply disruptions in the Middle East drove UK oil as high as $59.49 a barrel, which is a new 27-month high. Let's have a quick look at that oil chart there. Momentum evaporated midweek as the price slipped back, closing modestly up on the week there. The Catalonia referendum gained in importance as the Spanish authorities reacted in a clumsy and unnecessary way to try and prevent a vote taking place. Looking at the euro-dollar here, just pulling back a little bit on today's trade there, and really over the last couple of weeks actually. So, as I said there, the Spanish authorities reacting in a clumsy and unnecessary way to try and prevent the vote from taking place. The consequence is increased the probability that the Catalonia government announce a split from Spain, potentially undermining the euro slightly. Data and events for this week. Let's have a quick look at the calendar here. Really, the main focus of the week, a couple of main focuses, probably interest rates over from Australia. Also, we have ADP on Wednesday, non-farm employment change, which is a bit of a precursor to the non-farm payroll, typically the first Friday of each month. Not always, but typically the first Friday of each month, non-farm payroll employment change there, which is a Friday at 1:30 p.m. UK time. So the job growth is expected to have cooled markedly in September, and the Labour Department is expected to announce on Friday consensus numbers estimate that the US economy created around 100,000. It's actually dropped a little bit to 88,000 since we reviewed these notes here, sharply down from 156,000 new jobs created in August. The main cause perhaps being the effects of the two hurricanes that hit Texas and Florida, which could result in a report that is revised in the coming month or so. Unemployment rate is expected to remain at 4.4%, whilst average hourly earnings are expected to rise 0.2% month on month, with the pace of increases edging up from 0.1% growth seen in August. The Fed continues to monitor carefully for any signs of wage inflation that could signal a build in inflationary expectations. A host of FOMC members will be making speeches or commentating, including Dallas Fed President Robert Kaplan, Governor Jerome Powell, Philly Fed President Patrick Harker, and New York Fed President Bill Dudley. And as usual, any comments from central bankers have the potential to be market moving. Well, that's really it for this week's market news. I hope you have a great week's trading, and tune in next week for more of the same. Until then, bye-bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.